G'day guys, Sam Sari here. It's 3 p.m. in Australia at the moment, or Melbourne, and I'm feeling better from the last time I spoke, and hopefully some of you have watched my previous stream with some background content, and for those who have never seen it before, I'll give you some overview of what I think is happening, and pretty much bearish market. Hopefully you understand my terminologies, and if you've got any questions along the way, please raise them, and I'll try to answer them as I go along. So it is nasty. It's the nasty market, and I do feel for people. Unfortunately, there's a lot of idiots out there that keep talking about bullish scenarios, and a good trader always finds an argument for the other side as well. If you're bullish, look for an argument for a bearish scenario, so you can keep yourself non-biased, neutral. That's what you need to be. Anyway, I do have a problem with my voice, so just be patient with me. And I'm just getting over COVID, and it's taken a while, so just be patient with my husky voice. All right, so let's have a look at Bitcoin and the big picture. Just quickly summarize it, and if you know what a distribution structure, this is it. This top level is distribution, and we weren't sure about it until we broke a key level. And let's zoom in and let's talk about it. So we had this, suppose you can say, macro structure like that, and you can see it's pretty much broken that, even that key level there, which is sad. I was hoping for a bit of a bounce, for another entry for a down, but we still might get it. But the key level was this right there. There was a battle there. And this was definitely a bear flag. So let's just go zooming in more, closer and closer, so you can have a better view. Because this background stuff is going to set us up for a target. Obviously, it's not going to be a straight line. It's going to go zigzagging in and out. But there's a few things I want to cover off. And what I think about Luna. Luna's finished. That's at the moment. It will take a long time for it to recover. So anyway, we'll get to that. So the key levels, pivot points, right? That is a key pivot point right there. That was it. This trend line was, ignore the wicks, but this trend line was very important. And once you dropped it, there was a battle there to get back up. And it failed. And once it fails, what happens? It capitulates. And this is capitulation in a sense, but not as nasty as the previous one, or this one here. So this is a measured drop, and we've got more down to go. Okay, so definitely. Now, what gives us an idea that this is going to keep going down? And those are the things we can talk about. But for the short term, let's just quickly talk about this stuff here. This was definitely head and shoulders, this structure. And if we had it exact, hold on, let me just do that. If that was exact, give us a sec. So we're talking about measured moves. So if this was head and shoulders, we get that to the neckline, and ever so closely, if I can grab it, the measured move was pretty much close to it. And you can read about this line just moving a bit further down, and you can probably say, yep, that's even closer. Now, that's one way of measuring a target. Just give me a sec with this stupid noise. So that's a measured move. That's how we look at stuff. The other way of looking at a measured move is using Fibonacci. So we can go from the swing high to a swing low to a swing high, and if you look at it closely, if I just push that to the left, you can see it's pretty much the golden ratio of 1.618. So the head and shoulders or the fib extension gave us a nice measured move all the way to the downside. Then you look at historical data, and we can see that historically this was demand, and therefore this became demand as well. And then we had this up move, up thrust. Now this up thrust, this structure, you can say that is the BC from a Wyckoff reference. This is the up thrust. Whoops. We can probably use text words here. Up thrust. Yep. And basically it's a distribution. So if you look at Wyckoff strategy, there's a neckline. Each one had its own neckline. Obviously this neckline was roughly around here, that you had to be cautious. And this is just basic trading. That's a neckline there. Once you lose that neckline, so this is a topping off structure. This was a neckline, and we went above it just a bit and then went down again. And so trend lines and structure become very important. Now the question is, if we look at this, this is a structure. Left, that's a head all the way down to there, and this is somewhat right shoulder. So if we use this structure, and if we say that the neckline for this, the neckline is going to be a bit difficult, but the neckline you can roughly say, if we were to use this, maybe that is the neckline there. Yep, I understand that, but you just got to be flexible with your mind and think of this as a neckline. If this was to take place, and if we're assuming that is head and shoulders, we get the top to the neckline, and let's see how we're going. And you can see it's roughly coming to the 1.212 or 272 extension, so 23k. It's also almost correlation with the 200, and that's our 200 weekly. Yep, 200 weekly moving average. So that is going to be a strong point of a bounce. So looking at this structure, and we have that measured move. People might not be interested, but if you're not bearish, to your own detriment. But definitely this is going to be a bear market, and we're going to continue down. Not in a down, but we are. So that's one way of measuring the target, and this structure has its own target. So, and that target was measured by this. So if we get this from the top to the bottom, and from the breakout point, we pretty much achieved it. Okay, but it's not holding. So this right shoulder, this structure has a measured move. Now there's others that we're going to use. So this is one target that confirms that this level is level of interest. The other measured move is the ABC. So if we go down from there to there, let's do that line strong and make it thick, I suppose. We get that, that measured move, A, B, C, D, and that is also, again, equating to that same region, same range as well with the 200. So this is going to be very strong. I can see that 27k, it does look like it's going to fail, to tell the truth. For whatever reason, we're not finding any strength. So this green line I had here was one of the targets. The next target is 23k. 25k is also roughly in the picture, based on this section here. So if we look at that level, it's about 25k. So that might be a level as well, but I'm pretty confident the level here could be front running or could be pushed further down. But I do see that this is capitulation, and it's much more likely to come down. I was hoping that there might be a bounce, but it's looking very weak at the moment. So there you go. A lot of us thought that there might be a bounce here, and it's not happening at the moment. But that's pretty much looking from many perspectives for the target. What happens after that? Let's have a look. So I can get rid of all this. Let's look at the big picture. So if you look at it from the big picture perspective, in 2017, where is that? 2017 structure. We have this 1, 2, 3, 4. Sorry, 1, 2, 3, and an A, B, C correction. So this is like a failed swing setup. If we use this same principle to here, let me have a go and see if I got the right one there. No, that's not it. Okay. Just give me a sec, guys, and I'll pull it out. I'm just looking for that. Is it this one? Yeah. I'll get it eventually. Okay, so I had that theory in the past, so we'll see how that works out. But that is one scenario. I'm looking for my ABC correction. No, that's not the one. This is the one. And damn it. I'll lose it. Ah, here we go. That's the one. So this market cycle of 1, 2, 3, all in this area from 2017 all the way to pretty much 2020, far out. Is that a 3-year thing? 3-year span of eventually finding a real major breakout. I'm not going to say how long this is going to take, but what I'm going to show you is the correlation. The correlation is pretty much the same. Let's pick up a tool. We had a 1, 2, and 3, and then we had our A, B, C correction. A, B, and C. This is a COVID one, so I think this is very unlikely to happen. It was probably here that should have taken place, a double bottom, and then break up. But we didn't get it because of the COVID scenario. But you can see how the 200 was playing some part of it. So having that scenario, we got the same. We got our 1, we got our 2, and we got our high, which we never did because that would have prolonged this capitulation. And once we got that, 1, 2, 3, we have our A, B, and one scenario, and we're looking for that, is this. And obviously that failed. So what we're looking for now is a deeper correction. The ABC correction could be here. So this is my first initial thoughts. And if it's a deeper correction, which is I'm leaning towards, and the third deeper this layer is most likely for me between 13k, about 13k. But before that happens, we're going to have a bounce. And just the way we had a bounce here, when we had that A and then a B, right? So if you look at that scenario there, you get your fib, you find the bottom, you do it, and you pretty much the 618 is a rejection level, and then down. So it's not that hard, it's just stuff. So if we were to assume that we have the bounce here, we get our fib extension, and you can see 618 is roughly about 44k. I'm thinking it's not going to quite make it, so we might just use this level, the previous top. This is over an extension, maybe probably over performance. So if we assume that is the case there, we're going to have roughly 42k, which aligns with this midsection. So you can see from here, that is the midsection, and it's got the majority of the volume, and it equates to our 618 level. So if we were to get a nice bounce here, a dead cat bounce will hit the 0.5 and then drop more. So it's going to be very interesting to see if we can get above the 0.5. I will start taking profit from 0.5, and as it goes up, take more profit and then let it drop. And this measured move, so don't forget we had a measured move. So from there to there, if that's the case, we're going to have another measured move. Makes sense? Now, this measured move, you say, where did it take place? It takes place all the time. So I'll give you an example. And so less, sometimes it overperforms, but it is there. It's always there on key levels, right? So here, for instance, if you look at this measured move to the bottom, you get that top, and just as an example, you can see that measured move, pretty much. So A, B equals C, D. I believe we did it here as well. You can tell, I studied my chart. We had our measured move from there to there, or I think it was, yeah, was it there to there, and we had a move. So we grab that, and again, a measured move, which is AB equals CD. Right, so that tool is this one here. Where is it? Here's my ABC, that's the one. So we have that. It's a harmonic, but it's equal measure. So if we're going to assume that it occurs a lot, and the way this structure is set up, the reason why I'm looking at that structure is because of this. Realistically, it's because of this structure here. It's pretty much taller. It's a it's a bear flag, sorry. This, now the question is that where's the next to be measured from? All right. Sometimes you've got to ignore wicks, so it becomes difficult with the wicks. So, but it's not much of a difference for the measured move. You take the top, or you take the slightly below, and use these wicks, or use the body of the candle. This is where the variations come, and the variations could make it fall short a bit, and in this case it's about 25k. So pay attention to the candlesticks, and this is our first target. It's getting close to it. That is my point A. It might overperform, we might front run it, but this level here, like I said, could be, this range is what I'm interested in for the bounce. The 200 moving average is coming up, and it looks like a good spot. We're not that far off now, are we? It's only like 4 or 5k. And so let's have a closer look. So that pretty much giving you a big picture. And now let's have a closer look to Bitcoin on the 4 hour. This is what it's doing. Oh, that sucks. Okay. That is pretty much a bear flag that we just dropped. I didn't see that. I wasn't watching it, but that is a bear flag that we just created and fell through. Interesting enough. So that was a continuation pattern to the downside. So once that happens, there is no bounce here. So didn't see that coming. I slept through that. But yeah, that is pretty much a bear flag, and we can continue on. We can also use this. Unfortunately, there are ways of doing this, and the bloody thing again tells us it's around here as well. So yeah, it doesn't look like we're going to get a bounce. How's that? I thought we might get a bounce. And basically this level had played resistance, so there is no, maybe the lunar thing really kicked the guts out of the market. Bummer. Anyway, I was looking to put more thoughts into this bounce. Didn't get it. Okay, now let's look at correlation with the stock market and so on. Let's quickly go through this. This chart, SP 500. Let's just do this. Pretty much doing the fib extension. We've passed the 1. So if we pass the 1 extension, which was roughly around here, so we should have found some support here. It's probably still potentially, but it's just not going to be strong. It's just going to continue down. So these are the areas I'm looking at. So let's look at this. Look at this chart, and you can see this. It's my 200. I think it's my 200 moving average. Give me a sec. Yep, 200 weekly moving averages. So, whoops. Let's just get the free day was probably a bit better. Give you a bit of an idea. So the stock market is pretty much doing risk off to the US dollar, and we'll have a look at the US dollar. But you can see how historically, when we had these corrections, for whatever reason, the weekly 200 moving average played a good role. And this was a COVID incident, so this is a black swan event, but you just went right through it, didn't it? Now, so you can see the correlation here. There's a bit of activity, and this is likely to be the target, in my opinion. Now let's look at another way of doing it. So you can look at that as a channel. I went through this with my screen. So you probably want to look at that rather than me going over it again, but this is simplistic terms. This is a major run, big, you can see how it went, and it's curving onto the top. So you can see how it's just curving, and that's a good sign that there's a weakness in the market. And if you follow the other commentaries, it's about the inflation rate, and the mass printing has caused inflation, and they need to put that under control, save the dollar, and therefore raise interest rates. We're just like puppets. They cause it, and to save the fiat system of mass printing, they raise interest rates and everything else crashes. So here's the other aspect. That's one way of looking at the target, and I did this other one here. And there's an assumption there, and the assumption. Let's have a closer look. So what I've done is, it's not quite here on the weekly, 3 day, okay, let me do the daily. So what I did, and I'm not sure, okay, so I didn't do a good job there. Don't know why it's there, but I'm going to raise this up. So I'm going to use from the top to this level here, to this wick, as 1. And now you can see the 1.618 is coming close to it as well. Let me just see what the settings are. Okay. So we can do that, and you can see pretty much the golden ratio of the 1.618 is also coming down to that spot as well. So we've got two things that are aligned pretty much. Two methods, and they're pretty much pointing to the same area. We have an apex here. If you look at this apex of previous price action, like it was a level of significance, and if we get the middle of it, the middle range, which is roughly around there, look perfect. So that could be another level where there's volume concentration. So we might wick down a bit and go back up, but I am looking at this area pretty much coming down. All right, so that's SP 500. Let's look at the Nasdaq for a sec. Nasdaq now. Okay, the Nasdaq is also plummeting. It's technology affiliated, and that's why Bitcoin's dropping. And so now we've come to a level. Let's see how we go with this. Bitcoin, you have to look at the other markets. You can't look at crypto on its own, to your detriment. So if you look at the history, you'll know that these are all aligned. So looking at this, I still see the Nasdaq also coming down. It hasn't quite, so you can see, let's do another method as well. Just give me a sec. From the top to this level as 1. I'll just use, we've probably found support, and again, some correlation to this area as well with the 1.618, 1414. I'm pretty happy with that. So I do see this coming down more, and that's been conservative, by the way. It could be really much worse. So let's look at the US dollar. There you go. So the US dollar did a massive inverted head and shoulders. That was a neckline. Let's raise that up a bit, roughly around there. Or can we? So that was when we knew that this is going to change. Once it broke this 200 moving average on the weekly, as well as this trend, uptrend, and this structure, we can see how all-time high was there, and we passed it slightly. So US dollar has strength, and we pretty much broke above the all-time high. And so this has got a lot of momentum on the way, and you can say it's scary, but if that's the macro structure, and if it breaks up, continues on, bummer. That's pretty scary to how high it can go. So what we're going to do is let's just use two methods, from the swing low to the swing high to the swing low. So we hit the 1. That's why we've got a bit of resistance there, which makes sense. But I don't think it will take long before it breaks above it. And if we were to break above this, I dare say these levels will be, I think 414 will probably be more likely. And just see if there's anything else that can help us out. But yes, upward momentum. So that's what you got. And if this was our 1 here, which is like a cup, if I was to use that as a cup, again the 618 is there as well. So we might have a bit of a delay here along the way, but this momentum is very strong. If we put our tools, they're overextended at the moment, which makes sense. But using the strike, you're looking at, I mean, you can probably argue, if we do a weekly, let's look at the weekly for a sec. So the weekly, you can see that this is pretty much a double bottom and a continuation pattern. I did talk about this the other day. It used this as a support level. So we had this macro formation, bottom formation, and we pretty much upward momentum. That was a reversal. And when was that? So that was back in 2014, okay. 2018, found the, so here we are bull run. So April 2020, we had a probably Bitcoin bull run all the way down to the bottom, which is about June 2021, which was our top, and that's where Bitcoin is starting to lose. So there, you know, big money is flowing into the dollar. But yeah, you can see that we can potentially do a double top with this in the long run. So I think the markets, so we can have, let's have a look again. Last time we did this. So here we are, we have still at another fib level. So yeah, this is a continuation pattern, pretty much it. And you can probably argue that it's doing this. And if we do a measured move from there to there, so the top, and apply to the breakout, again, it's pretty high up there. So a measured move is like that as well. Yeah. So that's what I got in terms of Bitcoin and the other markets. So right now, looking at this, let's see, okay. Let's look at a small time frame. Yeah, the markets are weak, that's for sure. So 27. We are likely to, there's no reversal, there's no trade here yet. So if we look across, let's see if there's, look on the daily for a sec. Okay, so the MACD you can see is how much it's pointing down. This is, so RSI, no indication of a turning around as well. We're pretty much extended all the way down, but there's no bullish divergence at the moment. This does tell us there's a bit of a divergence, but you got, it's still, I'd like to see two things here. To start seeing something positive, I'd like to see this crossover. So that signal on the daily needs a crossover. Pretty much like this. Have some clue. And when can we start being positive, bullish? Well, first we want to see it go above 50%. This orange momentum indicator. We want to see that start going up. Obviously, see this is a 50% level on the RSI. That is, once we lose the 50%, it's a change in trend. So that's why we're going down. So this was another signal of saying, yep, we're going to drop down more. So that was pretty much up there. The moment we lose a 50% on RSI on the daily, that means that we're going to have a change in trend, and we had it from there. So yeah, there's a lot of things that will help us out. At the moment, nowhere near of a change in signal or change in trend. We are pretty much going south. There are other tools that I don't want to go through them all, but let's have a quick look. Whoops. Let's just do this for a second. Now let's go through these other tools that I have. Or indicators. So this fib fan from the bottom to the top, you can see that that line was compromised as well. Yeah, you can argue a bit about the level, but irrespective, even if I move it a bit to that level, it's still compromised. Okay, so let's look at this tool. So 28k was its range, and now 25k is the next one. So yeah, again 25k is popping its head up, and then 23k. So this volatility adjustment grid is one tool. If we look at this, I'll put on the daily. Yep. This is the, and you should see this many times over. This is the logarithmic curve, and let's just clean this up a bit. Where are we? Clean that up. Don't need that. Okay, we can clean that up. Get rid of that. So you can see this logarithmic curve in the past around the 200 moving average, and that line played a very long-term support, and we broke it. So that's not good. So we're more bearish than we thought. So then, based on this, the worst case scenario is this bottom logarithmic line. So if we were to, I think if we do that, that's pretty much better. So you can see this 200 moving average is still pretty much the target for a good bounce. 21, 22k. COVID scenario came all the way down here. That probably influenced this chart, and we can't use this for finding the bottom. We can find the other extension, but we can't find the bottom. So this logarithmic curve does help up to a point, but as I showed you, other things, other structures, it would be nice if this worked. Give me a sec. Ah, that's why. Sorry. So let's have that fan disappear. Let's look at a few more tools. What we have, the Ichimoki Cloud. That's not the one I wanted. I wanted this one here. Just give me a sec. Okay. So this is the daily. And if we look on the daily, obviously you need to know these tools. Where it's thick and thin gives you the inclination of weakness and strength. So what we had here, if we look close, we had the red cloud, as you can see, and this blue cloud acting as resistance as well, and it just failed to break past it. And you can see now we've got this ribbon acting as resistance all the way down. It's a lagging indicator, but it is. Here we had this ribbon acting as resistance, and once we broke above it, we had a bit of a chance, but you can see this area didn't quite work out. But if you look at this ribbon, most of the time, this is on the daily. If we do the weekly, it's probably a bit better. Yeah, the weekly is a bit better. And you can see this cloud, this ribbon acting as support. The moment we go through the cloud, we have capitulation. And the moment we go above the cloud, we have another nice run. Now you can see this red section, this thinning out. So we can see it's thinning out. I think that we will just continue to have this ribbon. But you can see this part as well. On the weekly, major resistance, the edge of this cloud. So it's getting thinner, but we've got to see it come down before we can see it come back up. So this is a weekly candlestick. That looks terrible. And the weekly candlestick pretty much shows you capitulation. And I'll show you something interesting as well along with this. So that's that, showing a real weakness. And let's look at the 4 hour. Give me a sec. That's what's shown on the 4 hour. Okay, so it's still acting as you can see, resistance. Now that we've come down, this cloud is not, so it's not really thinning out, it's just pretty much thick here as well on the 4 hour. And you've got this red band that's also acting as resistance, and if anything, it's getting wider. So the tools give you a feel for what's happening as well. Got these triple moving averages. When do we go back in? Change market structure, we don't have that. Nowhere near at the moment. And let's have a look at another chart for a sec. Oh, good. I'm shorting that, so I'm pretty happy. So here's another chart that I was looking at, and just continues to fail. No bounce. Bummer. So I was looking for, so what we have here with the dotted lines is a 10 and 50 moving average. And it's a good daily indicator. So let's put on the daily for a sec. If we clear that, you can see the daily indicator. 10 and 50 is a good indicator for support, and the moment they cross over or break down through it, it becomes bearish. The 200 moving average also played its role. Give me a sec. Oh, I don't have it here. All right, leave it at that. But definitely the 200 moving average on the daily is pretty important as well. And we don't have that. So if we were to do this from the daily, you can see that that's one of the indicators that we will look at. I'll look at the other one as well. So we've got the 200s, and we're pretty much below it. And if you look at my previous post, it really resembles this in the past, this section here. So this section here, we have our 200 acting as resistance, and I had another chart with the 21 monthly moving average, and this was a pivot point, and we pretty much did the same. It was our pivot point, and we just broke down. So I do expect something like this. A nice dip, capitulation, sideways for a while, and then up. So if we can look at that from that perspective, give me a sec. There's a lot of things that you can look at this chart and you go, oh, bugger, I wish I took profit. And I'll give you some simple ideas. They're not difficult. And it's one of them. So I was fortunate enough to close all my. I actually did very well here. I did average here, but I did very well here, where I closed all my leverage and margin right at the top. I missed it by $100, so I was pretty lucky. But what I didn't do well is when it dropped down here, I took 30% out of my portfolio, and I should have taken it more. I thought that there might be a good chance that this could go up again for double top. So I wanted to see a clear resistance, but this one just went down too quick. So what I did was basically, as it kept dropping, I had my levels and I kept taking money out. And here was a complicated one. Initially I thought this was a bear flag, and I thought this point here would go down, and that really tricked me. But I didn't follow it. I didn't chase it, and lucky enough, I should have shorted, and I've slept through that. Really pissed off. But anyway, I did the right stuff here, and so on. So there's a whole bunch of stuff there that is very clear. And if we were to just go over it quickly, so you can know how to apply it, just put this line in. You can see how my lines work. This big yellow, this white line here, big picture. This one here will be better. This line here, you can see that once it broke that trend line, we're just going down. Okay, you can say it's an ascending wedge on a big picture, and yep, there's subcomponents. And you could say, you can argue about moving averages and all the rest. But when you look at it in a simplistic term, you can see if we apply it back where we were, this, okay, let's just do this. That's a trend line that was compromised. That's a trend line that's been compromised. You can see the fractal. You can see how this was acting as a resistance, a different formation, but it's acting as resistance. Acting as a resistance, we break that major support line. So this is what you're going to expect. And it's pretty much lined up, isn't it? Now we've got this 200 moving average. I'm hoping we actually get close to it, and we'll find a reversal. The reversal will be this dragged off for 3 months before it went up. But you can see simplistically, if it breaks this level, it goes. So we've got a long way to go. If you look at it from that perspective, for the newbie, you don't have to be really good at trading. All you have to do is learn some of these basics and some trend lines, and realistically, you need to follow the right people. There's a few out there. Come and join our group. 10 days free trial, and then we'll save you a lot of money. Very cheap. So just membership. It's like what was it? $45 for 3 months, and you can save yourself a lot of headaches. I'm not a signal service. We just keep talking about what we look for, what key levels there are. And in some cases, we mention trades, where to short, where to go long. And anyway, it will save you a lot of headaches just finding the right people. On YouTube, I'm not the only one, but there's a lot of moon boys, and you got to avoid those guys. But yeah, it's simplicity. So I've talked about. Let's look at this from a macro perspective. Actually, might just use this one here. Just make sure. Let's see if that gives us anything else. All right. The 618 also is very close to, give it or not, the 200 moving average. There you go. So again, 618 is an area of interest. If we put the candlesticks back in there. So this is going to, well, let's chuck another chart instead. So let's do BTC USD. Okay, well, let's do Coinbase. Looks like I've been looking at it this. The US bit stamp. I'm sure you didn't touch that one. All right. So because it's got a bit more history with the moving averages, so okay, this one's a bit different. How does that work out? Okay, it's a bit different, isn't it? Okay, hold on, give me a sec. weekly 200. Okay, that's a bit odd. So look, you can see the differences between the charts. That's a bit odd. So if I go to index, okay, that's pretty much close to it as well. Okay, so we are pretty much close to one of them, but I think it's this one here, this blue one, because you can see here, the blue acted as support, the green was pretty much acting as a resistance. So we might find support, but I think that's the case. I think it's still down here, where we're going to find major support and a major bounce. What we might just see is, I'm hoping we'll still go like that, and then back down. So just give me a sec. Our ABC move, okay, so that's a fib level, definitely a fib level. Oops, let's do that again. Do we have anything here? Yeah, we might find a bit of a bounce here. Might. At the moment, I can't say anything because we want to see the candlesticks, right? Give me a sec. Look at the right settings. Right. If I take the fib off, okay, maybe a bit lower. Yeah, we might have a bit more lower to. Let's see if that works. This point to that point. Let's do this clean chart. Yeah, it's not quite there, is it? And then if I do that, no, so even though it's a moving average, it's probably not enough. You need more than one element. And we'll go back to this setting. All right. So that is definitely a fib level, but it's the 6-7. That's not really the traditional one. Let's just do the reverse on this. Give me a sec. All right, 618 is down there. Okay. Yeah, so I'm looking for, big picture is here, this range. Big picture. This is where the bull run started, and this is where it's going to come back to return. So that's if this doesn't. Well, I'm looking at the bearish market. So here we have a bounce, and then further down. Really, we've got to really assess what takes place before we can make a conclusion about this spot here. If we get a bounce here and a rejection here, then we can pretty much be comfortable doing the fib extension, and then levels over here. All right, that's pretty much it. Looking at the comments. Yep, so you're very new to this, need some help, or start learning the trade, do a course. That's what I say to you guys. For those people who don't know the basics, let me just go to this place here. Give me a sec. This is my website, free course material, just basic stuff. Go there, click on these modules, and you know, like if I click on support and resistance levels, you will see that there's a whole bunch of some videos and some text. You just need to know the basics. Let's see, there we go. Haven't done this for a while. Yep, there's a video there that explains certain things, how to work out resistance support levels. So yeah, you can just go there, don't have to sign in, so it's just free course stuff. Some more videos talking about candlesticks, trend lines, and that's what you need for the base, the newbies. You need some stuff. You need to know what Fibonacci is. You need to know what moving averages are, trends. If you can put all these items or elements onto a chart, you will understand the story that I'm doing. It takes a while to become good at implementing it, but all these elements, if you have 2 or 3 elements come together on a specific level, or it makes a good case for a trade. Anyway, I'm wrapping it up. Hopefully you liked it. Hopefully it gives you some content, but definitely looking for a bounce here. We're in the bounce area, and I'm looking for a bounce. Hopefully it goes back up to 34k or more, and then we'll see what happens after that. But this is definitely an ABC move, and then potentially there's a bigger ABC move to the downside, and we might see this type of